Welcome to simplerstocks.com. My name is Don Kaufman. Today we will be looking at kind of the pop and kind of the drop of Apple in today's trade. If we first and foremost, we're coming towards the close of the trading session. There's about 20 minutes to go to the close. I am on Pacific time, so 1 o'clock is our close over here. It's kind of nice. Still gives us an entire day free having a 1 o'clock close. Nevertheless, one of the things I want to point out, so the S&Ps right now are down about 13 points. The Nasdaq futures are down about 18. The Russell down about 10. Apple is bucking the trend today. It's up $1.33, but it's way off the highs of the session, which has been just shy of the 130 mark. So Apple early in the session popped pretty significantly, and when Apple popped, it was actually supporting the entire Nasdaq. But the one nice perspective I want to look at today happens to deal with the advanced decline line, specifically in the Nasdaq. Okay, it doesn't get much worse than right now, folks. So the Nasdaq 100's got about 93 decliners on it. And ultimately, Apple, because of the sheer magnitude, the market cap of Apple, it's kind of propping up the Nasdaq. Ultimately, what I'm saying is the Nasdaq would be much worse off if it weren't for Apple being positive. Not to mention Facebook is helping it as well. However, this could actually spell a little bit more risk for Apple in the short duration over here. Again, the Nasdaq not faring very well today. Apple kind of bucking the trend a little bit. I think it's another opportunity to try to initiate a bit of a short position in Apple. It tried to rally today and it failed. Granted, it's still up $1.30. When I say it failed, okay, quite substantially so off the high levels today, which has been 129 and change. Apple's come off pretty significant amount, and we still have, again, about 18 minutes to go to the cash close. We could see some more sell side activity kind of come in over here. Now, the question is, what kind of a position might you want to build in Apple? Now, I myself, for giving kind of full disclosure, I already have a number of different short positions on Apple. One of my short positions on Apple is a much longer term short. That is, I've actually shorted some shares of stock of Apple, and I'm going to hold those, and I'm probably going to hold those 6 months, 9 months. Okay, that's to me more of an investment type strategy. Yes, I can be short as an investment, and I know that sounds a little bit peculiar. You know, I buy a lot of Apple products, and I still want to short the stock, because the fundamentals, might not support some of the stock price appreciation we've seen as of lately. However, in the short term, okay, I really think there's some downside opportunity in Apple here. And as such, the kind of trade that you might want to look at, first of all, you have to consider the fact that it has an earnings announcement coming out. When are the earnings coming out? We'll go ahead and back over to the chart. Just be aware, earnings are coming out towards the end of July. So any trade that I would want to look at is probably going to be a little bit more shallow in time frame than the earnings announcement. So we would look 23 days or less if you're going to consider options. If you're going to consider just the stock itself, that's fine. Again, as I discussed, I already have a position in Apple. In fact, I'll display it here on the monitor tab. I have a position in Apple. I'm short some shares of the stock, and this is just in the kind of the simpler trading account that I'm using here. It is one of my own accounts. I just have it segregated as a simpler trading account. So I'm short some stock, and I purchased a put spread. If you're not in a trade like this, here's the opportunity to consider doing just that. And to consider the short trade in Apple, you might want to open up a variety of different expirations. 23 days is probably fine. And as a substitute to being short the stock, you could try to use a type of a vertical spread. And you kind of want your scenario to be in a vertical spread, about a risk a buck to make a buck kind of scenario, because it really defines your risk. And at times it's not going to work out, perfectly over here. When I say risk a buck to make a buck, I'm being quite literal. That could mean risk a buck 50 to make a buck 50, risk 50 cents to make 50 cents. But a scenario like this, here's a 130, 127 put spread, or 130, 127 put spread for about $1.52 debit. This is risk a buck 50 to make a buck 50. And all that does is it kind of puts a stop in place over there. Hey, if you're totally wrong, you lose a buck 50. If you're totally right, you're probably going to make a buck 50 or somewhere in between. But it's just critically important to recognize how to define your risk in a marketplace that, again, can be this volatile in this short period of time. Apple, though, well off the highs of the session. Apple still is holding up the Nasdaq, and it's strong today. And why would I want to even consider selling a product that's strong? Okay, well, because the rest of the Nasdaq right now is actually signaling some downside. And I believe Apple and both Facebook will probably get pulled along with it. Thanks a lot, everybody, for joining us here on simplerstocks.com.